Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Scholler in studio. Well, stocks are coming off a day of losses after President Donald Trump announced double-digit tariffs on countries like China, Canada, and Mexico. The Dow Jones Industrial Average rebounded from a steep drop, though, to end the day with a loss of just a little over 100 points, and we are setting up for a mixed open early on Tuesday. Well, as traders navigate the latest coming out of the White House, this week also brings lots of data on the jobs front and continued corporate earnings, including from big technology names like Amazon and Alphabet. Let's take a look at what's on tap in today's show. In an exclusive debut, Ferrara Candy Company will show us its 30-second Super Bowl ad with some serious star power involved. Ferrara spokesperson Katie Duffy will have more. And Rethinking Work, that's a newly published book by Rashad Tobaccowala. It debuts today. And Rashad will join us in person for a look at the top trends disrupting the workforce. Well, Fortune is going to ring the opening bell here at the stock exchange to celebrate its 95th anniversary. Editor-in-chief and Chief Content Officer Alyson Shontell will come on after opening the equity market. As we get ready to welcome Fortune to the Bell podium, let's dive into trading action. Joining me now with more on how this market is looking at the setup is Jay Jacobs, U.S. Head of Thematic and Active ETFs at BlackRock. Jay, welcome.
Thank you.
It's been a few weeks since we touched base, and a lot has changed, of course, in the market. What is your view?
Well, this market's playing out as we expected a couple years ago when we released our Mega Forces framework, which is really looking at 5 powerful trends that are impacting the markets. 2 of those trends are artificial intelligence and geopolitical fragmentation. I think we've seen both of those kind of really driving markets this year, with the DeepSeek news 1 week ago, as well as the tariff news this week.
So let's talk a little bit about the tariff news in terms of how your company and you within BlackRock are navigating that when it comes to ETFs and exposure.
Well, I think one of the things that investors have to keep their eye on now is how much of their portfolio is exposed to tariff risk. One of the sectors that's going to have some of the most exposure is really technology stocks. And U.S. tech has been, the belle of the ball for several years now, but it is a sector that gets 60% of its revenue overseas. So if you believe in U.S. tech still bringing this incredible growth engine, but are worried about risk of tariffs and geopolitical fragmentation, you really need to take a new lens of kind of focusing on more domestic-oriented tech companies. We did release a strategy on this called IETC. It's a U.S. tech-focused fund, and it's looking at who hires in the U.S., who builds their technology in the U.S., and primarily who sells their technology within the U.S. to keep that tech exposure, but really try to isolate that geopolitical risk.
Let's talk about artificial intelligence. Of course, this hype has been real for several years with the onset of OpenAI. What is your expectation for AI in 2025?
This is still one of the most powerful themes in the market, and probably more broadly across the economy and society. With some of the news last week, what it showed us is that this is still early in this technology. While we're seeing billions being spent to build out digital infrastructure to support artificial intelligence, and we're seeing cutting-edge models, there's still opportunities to innovate, like creating lower-cost small language models. So I think adoption is going to accelerate, particularly as you see costs potentially come down in artificial intelligence. But you're also going to see leading Mag 7 companies still push the frontier for what AI is capable of.
Certainly the Mag 7 has been in focus. We'll get earnings results from Alphabet and Amazon this week. Anything in particular on your radar for those firms when it comes to AI?
I think the big thing is going to be their continued commitment to deploy capital into artificial intelligence. We want to have models that are ever more powerful. We want to have digital infrastructure that can support growing use of AI. Every time we type in a ChatGPT query, it needs that digital infrastructure behind it. So we're looking for companies to really reaffirm and provide more detail on how they're continuing to invest in digital infrastructure.
So we have seen some choppiness this year, and many market watchers, many guests on our show have said, yes, buckle up for some volatility, but by and large, they do still see fundamentals are in place, and they expect the market to rise. Has some of this choppiness changed your view at all?
Well, it's put a new emphasis on diversifiers in a portfolio. Typically investors want to look at stocks and bonds, but we're seeing more use cases for alts like gold, like Bitcoin, that are just not going to be driven by the same macro factors as equities or bonds. In particular, gold and Bitcoin can benefit from things like rising geopolitical risk or rising fears about inflation. So we think these are great potential portfolio hedges to have alongside your stock and bond portfolio.
In terms of other themes that you're watching, AI, we know, is one on everyone's radar. What are other ones maybe under the surface that you're paying attention to?
Well, one of the other mega forces that I think we should keep an eye on is our demographic divergence theme. This is about aging populations in developed markets. This is also about more youthful populations in emerging markets. We think we could see some tremendous medical breakthroughs in the United States this year to treat advanced age-related diseases, Alzheimer's, Parkinson's, various cancer drugs. So we don't want to lose sight. AI and geopolitics are certainly in the news. As the population ages in the U.S., I think there's going to be a tremendous focus on medical innovation this year.
What about infrastructure?
This is one of our highest conviction themes, and we've seen a tremendous amount of client interest in infrastructure this year for two reasons. One is from a policy perspective. As we see more reshoring, more domestic protection of industries, we need to build out infrastructure, better highways, better ports, better airports. On top of that, though, infrastructure is very unique in a portfolio. It tends to be very defensive because people still need to drive to work, and it tends to be more of an inflation hedge. You can raise tolls on a bridge if inflation starts to increase. So it's a theme that we like both from a growth perspective, but also from this kind of diversification, defensive inflation hedge as well in a portfolio.
So you mentioned gold and Bitcoin earlier. I want to dive a little bit deeper into those. Bitcoin, at least, is something we've been watching closely, as it has been moving in some ways in tandem with the market, but with a bit more risk tied to it. What should our viewers know?
I think what the market is missing with Bitcoin is they tend to view it through this kind of risk-on, risk-off lens, which would suggest that it should be tied to our stocks up or our stocks down. The reality is, over the long term, Bitcoin is not a risk-on, risk-off type of idea. It's really going to be driven by more adoption of individuals and institutions that view greater geopolitical risk, greater need for diversification, and potential inflation hedges. So the short term of how Bitcoin is trading is not reflective of what the long-term use case is of Bitcoin. I think when we see these market sell-offs in tandem with stocks, it's a good opportunity for investors to kind of rethink what is the purpose of Bitcoin in their portfolio.
Jay Jacobs with BlackRock. Jay, thank you so much for joining. He's the U.S. head of thematic and active ETFs at BlackRock. We appreciate it.
Thank you.
All right, well, stay with us because up next, Ferrara will be among the advertisers returning to the big game this year, and we'll have an exclusive look at the Nerds Candy commercial that'll air during Super Bowl 59. That's next.
Today we're taking you behind the scenes of Summit One Vanderbilt. This extraordinary destination offers stunning views and immersive experiences, providing a truly unique perspective on a city that never sleeps. That was the most incredible elevator ride I've ever experienced.
Yes.
How long did it take us to get up here?
35 seconds to go from the ground floor all the way up to the 91st floor. It's pretty incredible.
Pretty incredible, and the experience starts the moment you step into the elevator.
Absolutely. We take you from one room and one experience to another to help transition you. And right now in the Hall of Light, we're about ready to go into Transcendence. You ready to go in?
I'm ready.
Perfect.
Let's go.
Let's do this.
Wow, this room is amazing.
Wow is right. We are in Transcendence. We are on the 91st floor here in One Vanderbilt, and this room truly is spectacular. It's probably one of the most Instagram locations in the entire world. We are in probably the most famous and most sought after room in all of Summit. We're in Affinity. And what this really speaks to is Kenzo's vision of play. By no means is One Vanderbilt or Summit an area of being passive. We encourage you, we want you to be part of the installation. Here, you become actually involved within the installation, the space. Obviously from the balloons themselves, people that come into this space are able to make it their own. They're able to come through and actually see the world in a much different component. They really are. It's a unique view that you're not going to get anywhere else in the world. I would even encourage you, quite frankly, to help come through with me. So we have people who come here who automatically know where they want to stand, what they want to wear, and quite frankly, the type of picture they want to take, because they know it's going to be shared all across the world. And that's the most amazing thing here. People are evangelizing the product for us. They're evangelizing the Summit brand, and in doing so,
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. As the excitement ahead of Super Bowl 59 ramps up, companies are paying top dollar to feature their brands in the biggest TV advertising event of the year. In fact, some companies are looking to score before kickoff by releasing their ads early. With that in mind, let's take an exclusive look at Ferrara Candy Company's big game ad this year.
The colors all around me, so pretty in the sky, are also on the face of people going by. And I think to myself, what a wonderful world.
When two great things combine, it's a wonderful world. Nerds Gummy Clusters. Unleash your senses.
Gotta love it. What a wonderful world when you combine nerds and Shaboozey. And joining me now with more is Katie Duffy, Vice President of Global Brands at Ferrara, of course, the company that owns the Nerds brand. Katie, welcome. It's great to have you. And what went into this commercial?
Well, thank you so much for having us this morning. We're thrilled to share our 30-second spot for the big game with you today. You know, this opportunity to return to the big game with a great advertisement for Nerds Candy is such an awesome opportunity. As you can see, our ad is all about a multisensorial experience, visually, musically, inspired by the vibrancy of New Orleans. Nerds Gummy Clusters transform Shaboozey's ordinary day into something unexpected, wonderful, and unleashing all of the senses. As you can also see, you know, it includes Shaboozey's unique remake of New Orleans native Louis Armstrong's timeless hit, What a Wonderful World. And Shaboozey, as a celebrity partner, really embodies the core campaign idea of bringing together unexpected combinations to really unleash your senses, just like his genre-crossing musical style. What a great partner for us to have involved. We also brought in musically an authentic New Orleans second line band to really complement the overall spot. We're thrilled to be back.
Katie, I got to tell you, we have some nerds on set here. These are the official gummy clusters, and I was trying some yesterday. These ones, in fact, they were quite delicious and a great game day snack. I must add, the Super Bowl is a massive event, and so why did your company, the company that you work for, Ferrara, want to return to the big game this year?
You know, we saw such a successful impact last year. We really had a lot of tremendous fan response to the Nerd Spot last year. When we look at our overall gains in household penetration, you know, we gained almost 5 points of household penetration in the last 52 weeks. And now we're seeing, you know, over 25% of US households are purchasing the Nerds brand. It's the #1 brand in the category. It's had tremendous growth of 36% in the latest 52 weeks. And we know that all of the visibility of big game advertising brings more eyeballs to our brand with more opportunity to reach more consumers. So when you think about the 25% of households that buy Nerds, we see leading confectionery brands in chocolate, for example, have household penetration near 50%. And so we see plenty of white space room for our brand and for our segment of the sugar confections part of the category to continue to grow.
Mm-hmm. And to that end, Katie, I want to learn more about this brand's incredible growth, how we've seen it rise and expand over time. What can you tell us?
Well, I can tell you that when we first acquired the brand in 2018, the brand was tracking to less than $70 million in retail sales. And in the latest 52 weeks, the brand is actually $869 million. It's been a tremendous growth trajectory for the business. And it's really because we've been able to bring a brand that is known and loved by consumers. And we have infused new life into the brand by making it modern, relevant. Bringing the innovation of gummy clusters to life has really helped us unlock a lot of growth potential. We also have seen that really everyday fans, celebrities, and influencers alike show their love for gummy clusters. And it's really showing up in culture in ways that we really could have never anticipated. We see people even mentioning on late night TV, including in national crossword puzzles, people dressing up as gummy clusters for Halloween. So the product has really taken off and infused a lot of life into the Nerds brand, which has really been an awesome journey to take part in.
We saw Shabuzi in that exclusive look at the Nerds Ferrara Candy Company Super Bowl ad debut just a few moments ago. Katie, what are some of the big name celebrities and brands that have really infused these Nerds gummy clusters into culture?
Yeah, you know, one of our original biggest hits for the brand was an organic Instagram story that was posted by Kylie Jenner in 2021, shortly after the product launched. She has tremendous exposure with a social following that's in the hundreds of millions. So to have that kind of traction right away, we've seen Lil Wayne, Travis Kelce, Bubba Wallace, people from all different areas and interests in all walks of life have really brought visibility to our brand and to our wonderful Gummy Clusters product.
Lastly, Katie, I want to hear more about the marketing efforts that you're putting into the Super Bowl this year.
Yeah, thank you so much for that question. We've got really expansive plans with 360-degree support. So you'll see Nerds Candy showing up in paid media. We've got an awesome digital social plan, of course, our TV creative that we shared, as well as a holistic retail and shopper marketing program. We have a whole thematic around Make the Rivalry Sweeter, and consumers can now find 2 limited time offer Nerds Gummy Cluster products in store, 2 flavors that are unique for right now. One is Grape Strawberry Blitz, and the other is Berry Punch Brush. We've got, of course, consumer overlay sweepstakes where you can win awesome football themed prizes as a part of that activation as well.
Katie Duffy, Vice President of Global Brands at Ferrara. Our whole team here is going to be joining these Nerds Gummy Clusters leading into the big game, and I'm sure afterward as well. Katie Duffy, thanks so much.
Thank you.
All right, well, stay with us because up next, Rashad Tabakawala comes out with a new book today. It's called Rethinking Work, and he will join us in person to tell us all about it.
For coming to the exchange today to share the major news announcement. Why don't you tell me a little bit more about it?
Yeah, so we just passed 200 million in annual recurring revenue, and I met you last time 15 months ago when we made the first announcement, and so we're super excited. We're growing 70% year over year, and it's just due to the amazing success that we're providing to our customers.
Abby, would you like to add to that?
Such a whirlwind being at Cribble. Like, I'm so proud of us, and to take 4 years to get to 100 million and then start, double it in 14 months is pretty exciting space to be in.
That's hugely significant, especially the time period that it all occurred. So what would you attribute this momentum to, and how do you think you're going to continue to leverage this fundraise?
First of all, back to the customers, it's about the value that we provide to them. It's an underserved segment. It is people who are running the systems that run the business, and the top growing companies in the public markets are growing at 30%. We're growing at 70%, and it is all back on the value that we provide to customers.
Abby, from your vantage point, how are you going to continue this momentum with growing those client relationships as well as enhancing your bottom line?
Well, our number one value at Cribble is to be customers first always, and we're constantly focused on how can we do the next thing that solves the problem that nobody else is solving for them. And so one of the things that I'm really excited about is that when we talk about our solutions and our ability to provide a data engine specific to IT and security, one of the gaps that we had was that we were able to provide analysis, but not in real time. And we have an exciting product announcement coming up that I'm going to let Clint talk about a little bit.
You beat me to the punch. I'm so excited to hear about the new product. Tell me about it, Clint.
This is an add-on to our Lake product called Lake House. As Abby mentioned, the biggest gap was I need to be able to ask and answer questions of data that's arriving right now. And I need that to be fast. I need my dashboards to go quickly. I need my alerts to fire really, really quickly. And so with our new offering in Lakehouse, we can start.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Scholler. Well, we are just over a month into the new year and already have seen a lot of change, including in the workplace. I do want to bring in my colleague, Trinity Chavez, with more on this story. Trinity, good morning.
Hey, Kristen, good morning. From the advancements in AI to more people returning to the office, the workplace is continuing to change. Rashad Tabakawala, author and former chief strategist and growth officer at Publicis Group, just came out with his latest book titled Rethinking Work: Seismic Changes in the Where, When, and Why, outlining to readers ways to be proactive in today's environment. Rashad, it's great to have you in studio. Thank you for joining us.
Thank you for having me.
So talk to me about what inspired you to write this book and the thought process behind it.
What inspired me to write the book is a belief that between 2020 and 2030, work will change more in these 10 years than it has in the previous 50. And it's going to change in more dramatic ways than just simply where somebody works, why somebody works, how somebody works, but more importantly, even what work is will change.
Yeah.
And I began to realize that most companies and leaders were not seeing the big picture and just fixating on things like return to the office.
And you know, leaders struggle with the where, when, why, and how, right? So talk to me about what you think was the toughest. Where do you think is the toughest in these various situations, and why?
So the toughest actually is for companies and their leaders to rethink themselves from being bosses to being leaders. We are in the age of de-bossification. And one of the reasons people do not want to return to the office is they do not want to return to the boss, right?
So what makes a good leader versus a boss? Talk to me about that differentiation.
So a big difference is all leaders have a little bit of boss in them, so it's not like all bosses are bad. But a boss spends most of their time, she or he, in allocating, delegating, monitoring, checking in, and reporting. And a leader spends their time building, making, creating, mentoring, and guiding. And to lead is to operate with a zone of influence. To be a boss is to operate with a zone of control.
Yes.
And so what people did not want to do is they did not want to come back to a zone of control. As I've said, the animals have left the zoo, they're not coming back, even if you put good meat in the cages.
How do you strike that perfect balance?
The idea really is to ask a simple question, not, for instance, in this whole idea of the office, of returning to the office, but how do I maximize the benefits of in-person interaction in a world where I'm trying to attract and retain world-class talent and compete with companies who are starting today with a blank sheet of paper, an agile marketplace, and AI.
And speaking of AI, where does AI and Gen AI fit into this broader strategy?
So AI, even today, is significantly underhyped. And one of the things that my book explains is all of us, you and me and a lot of us, are knowledge workers. We are now living in a world where knowledge is going to be free.
What do you mean by that statement?
For instance, in the last 24 hours or 36 hours, OpenAI has released a new sort of agent, and it's called Deep Research. This is different than Google Deep Research, but Deep Research. It will basically do McKinsey-level research in approximately 3 to 4 hours for $200 a month.
Wow.
So if that's true, you kind of wonder, like, how much are we paying for knowledge itself? So it won't be knowledge. So the future really is about AI plus HI. And HI is not just human intelligence, but it's human insight, human intuition, human interaction. And so to a great extent, AI is deeply underhyped. It's going to change the world as we know it. But a lot of people are asking a very wrong question, which is, what will AI do to them? And instead you should ask, what will AI do for me?
Exactly. Talk to me about how your time at Publicis Group shaped your view on the future of workplace.
So when I was at Publicis, where I remained an advisor 6 years after I stopped working full-time, but I worked around the world with, probably at any given time, I would visit 50 companies a year and 10 or 12 countries. And what became intensely clear, and became also true in my first book, is that most people don't actually do all the things that people claim they do in the office. So for instance, a lot of people say you have to come back to the office to learn, to create ideas, to build relationships. All right. In the real world, to build relationships, you went to bars and restaurants. To be creative, you'd go to offsites. To learn, you'd go to events and conferences. None of those existed in the office. And what I began to realize around the world is what was true was humans. And how do you inspire humans to learn? And if you say that's what a company is, which is getting teams aligned against a cause with humans that are constantly upgrading their mental operating systems, you have to think very differently about work.
And you have to be open to that open, that different concept of thinking.
Absolutely. And to a great extent also, and one of the key things with my book is the first 5 chapters explains why COVID is the least important thing in the future of work. So everyone's fixated on that. But if you think about multiple generations at work, we now have 5 generations, aging populations. You basically think about technology and marketplaces and a whole bunch of other stuff. Then you have to actually think about work so broadly that you change the strategy of your firm, you change the way you measure, you change your organizational design, and obviously you think about leadership.
They all intertwine into in each other. Well, thank you so much. It was a pleasure speaking with you again. Rashad Tabakawala, he is the author and former chief strategist at Growth Officer at Publicis Group. Thank you for joining us.
Thank you very much.
Now, don't go anywhere. We have the opening bell up next.
What changed in Unanchored is the advent of geolocation data on cell phones. And this was largely unavailable until, call it 2018, 2019. That data is so robust that you no longer have to only rely on tenant sales that are reported by the tenant. Now you can rely on customer traffic from cell phone data, which is incredibly robust, and it allows landlords to have information that we didn't have before. That, to me, is what really crossed the Rubicon between private investors making a local bet on convenience properties to now institutions, and us being the only public institution, really, being able to make a thesis that has math behind it that I think is convincing and durable. How frequently do you run an errand to go out at lunch and go to Chipotle? Do you go to the ATM at Wells Fargo? Does somebody in your family get your nails done? Do you go to the barber shop? These are running errands. These are not going shopping. For you to run errands, convenience is key. You want speed, access, and you want it to be in a timely manner. What we've really proven, and this is really through the data analytics, is that going shopping and running errands are 2 distinct, different property types. And being different property types, they deserve to have their own asset class for effectively running errands. And I'll give you some statistics. 2/3 of the customers that come onto our properties at Curbline are on our asset less than 7 minutes. That's not a going shopping experience. That's not lingering longer. We're not placemaking. We're not making a place where you linger forever or you multiple shop. We want a place that is right up on the road, easy to your house, and you're in and out. That is the biggest asset management question. Do you renew a tenant, or do you replace the tenant? And so this is not an occupancy business where you buy vacant buildings and you lease them up. You're buying fully leased buildings, and the question is always every single year, are you going to renew this tenant, or are you going to kick them out and replace them? And that.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, in just a moment, Fortune is going to celebrate the opening bell for its 95th anniversary. And my colleague, Trinity Chavez, rejoins me now with more. Quite the history, of course, Trinity, that Fortune has tied to the NYSE.
Absolutely, Kristen. Yeah, the NYSE has a long history of inviting journalists onto the trading floor as a part of the organization's commitment to transparency and low barriers to information. First visited the NYSE in 1933 for a January 1934 article spotlighting the exchange. It appeared in 1937 magazine in an article discussing New Deal's impact on Wall Street. NYSE gets full cover story in 1977. Now, Fortune magazine first visited the NYSE only 4 years after the magazine was founded, taking pictures and gathering information for a January 1934 article spotlighting the exchange. As a matter of fact, in just a few seconds, we're going to be seeing the executive team there on the Bell podium as they open up the U.S. equity markets. So I think we should tune into that, Kristen.
We are officially off to the races. Fortune up there on the Bell podium, as you see, celebrating its 95th anniversary. And Alyson Shontell, the editor-in-chief, is going to join me right here in studio in just a few minutes. But as we see this market open up a little bit mixed, not too far from record highs, but of course digesting the latest tariff news, I do want to bring in Rebecca Walzer. She's president at Walzer Wealth Management. Rebecca, always great to see you. And
great to be here.
What should investors make of this latest action?
Well, you know, it's a new administration. We're obviously not even a month in yet. And we did know that he was going to bring in some protectionist policies and leverage really economic policies and tariffs specifically, Kristen, to actually fight the cartels on the fentanyl side, drug trafficking, human trafficking, certainly on the Mexico side. Canada has way less, like about 1% of the fentanyl trafficking as Mexico does. But even Justin Trudeau yesterday obviously came out and said, hey, we are providing $1.3 billion to additional security to the actual border in order for the tariffs to be paused even in Canada. So it's really chaotic right now. Obviously, the Chinese tariffs are the bigger issue, with China coming out and saying, hey, we're going to retaliate by actually creating some antitrust probes here and putting tariffs on American goods. So this is right now sort of that tit for tat kind of scenario. And I think we have to give it some time to, I mean, I know no one likes this, right? But it is going to be some volatility, and we're going to have to let this play out for a little bit.
I think that's what investors might be looking for clarity for. Of course, Rebecca, we'll have to see how it plays out. But is there any expected timeline, or when we see tit-for-tat negotiations like this appear, how should investors navigate that in terms of making sure that they are protected and potentially diversified?
Absolutely great question. So I think anytime you have a new administration and you definitely have a sea change of economic policy, in other words, it's not like we went from Obama to Biden. We are going from the Biden administration to the Trump 2.0 administration. And this isn't a president, in my opinion, that understands now a lot more how the sausage is made than his inaugural first time around. And he also doesn't have to get reelected. So he can be a lot more bold. And he also feels like he has a mandate. So investors need to understand that that is going to breed volatility for a little bit. Now, if you want to kind of pin the time frame, I would expect that we have at least 90 days of adjustment period of getting our bearings on how this is going to play out, interplay out globally between countries. So investors need to understand and expect volatility for the next 90. Of course, if you're in for the long haul, you worry about the long game. You're not necessarily worried about these little machinations back and forth. But it is going to be probably a little bit of a more volatile year, absolutely.
And so, Rebecca, what are you advising clients in terms of how they should be positioning their portfolios in this scenario?
Yeah. So we are absolutely interested in the long play for the frontier basket that we're calling, Kristen, this is basically crypto, blockchain, robotics, but really quantum computing and AI. And I left those for the end because they're so overplayed, right? But that's the new frontier. And if investors have a long runway, long horizon to get returns or to get capital appreciation, they absolutely should invest now and hold for a long term. And I don't know exactly how that long term looks. 5+ years at least, and I wouldn't call 5 too long, but at least 10. But if you are looking for short-term price action gains, you can probably do that. It's going to be more difficult early in this administration, as we see Trump is very willing to tie economic policy to basically, all the things that he's trying to do geopolitically as far as border security and migration and all of these other things.
So I want to talk about some of the fundamentals because, of course, we know over time, Rebecca, economic growth, that data, we'll get a whole host of jobs data this week as well as corporate earnings, does move the market. And in terms of what we anticipate on the jobs front and earnings, what can you tell us?
Yeah, I mean, I think that, we have at the end of last year, and if you look at the COO and the CEO sort of sentiment, Kristen, this has been the best we've had in like 12 years. We have 60% saying that absolutely they're expanding R&D. They look at that M&A activity is going to be larger. All of our big investment bankers understand that this is going to be, they're forecasting 25-30% more M&A activity. So that would tell you that we're going to have a very pro-business, deregulatory environment. However, what we're seeing at the very beginning is him leveraging tariffs internationally, and that is causing some consternation, some volatility. So it's kind of like a mixed bag, because we had so much optimism economically after Trump was elected November 5th, but yet now that he's actually implementing policies, we've got CEOs and we've got a lot of United Auto Workers, we've got a lot of people, car manufacturers, calling up the White House and saying, we need an exemption, we need an exemption. So I think that we are going to just have to expect some volatility. And so if people are really on the price action side of it and getting really quick positive returns, it's going to be something that they're not used to for the next 90 days at the minimum, I would say.
Rebecca Walzer, always great to see you. Hope you can join us in person sometime here at the Stock Exchange. Rebecca's a president at Walzer Wealth Management. We look forward to it. All right, everyone, well, stay with us because it's still ahead. Bernadette Brennan, Managing Director at Serhant Commercial, is going to tell Trinity Chavez what she has seen when it comes to companies investing right here in Manhattan. And as Fortune celebrates its 95th birthday at the Stock Exchange, I'll speak with the Editor-in-Chief, Alyson Shontell, about the platform's business focus ahead. Plus, Romer Chief Executive Stephen Dooley reveals why his company is paying employees, not hotels. That model is shaking up corporate travel, and we'll have more on the other side of this short break.
Welcome to Floor Talk. It's great to have you on the show.
Thank you so much for having me.
So, Josie, congratulations are in order. You are part of the Buffalo Bills ownership group. Now, it was a great weekend for you this past weekend.
Amazing weekend, yes.
Had the family with you to celebrate a win. So tell me, what drew you to this opportunity and how does it fit with your goals?
Yeah, so the process started for me actually back in 2018. I originally had set out to put a group together to purchase the Real Salt Lake soccer team. And it was through that experience where I was approached by a representative from the NFL asking if this is something that I'd be interested in, as the league was looking to be more diverse in the type of LPs they accepted. So right away, I fell in love with the opportunity, and it went quickly, but I'm happy it did. And it's an honor to be a part of such a world-class organization.
Now, you're also involved in ventures like TGL, SailGP, and Footy Market. So tell me, how do you choose what to pursue, and what's your vision as an entrepreneur?
I tried to stick to things that I'm passionate about. And Footy Market is a gear exchange where you can buy and sell used gear online. And that one was close to my heart, being that I spent, my whole life dedicated to soccer. And I'm a big fan of emerging sports. TGL is obviously, golf has been around a long time, but TGL is like a new variation of the game, right? Trying to give viewers a different experience. And then SailGP is more of the same. It's something that we've known people are passionate about in terms of sailing, but now trying to package it all as a league and an emerging sport is something different. So super excited at all of my ventures and things that I work on. And, for me, it's another way of being on a team. It replaces being on, a field. So I've been having a ton of fun, and, it's just the start.
And Josie, as you grow your business portfolio, how are you building a legacy that's beyond?
Welcome back to NYSE TV Live. I'm Trinity Chavez, and joining me now in studio is Bernadette Brennan. She is Managing Director at Serhant Commercial to talk all things in the commercial real estate space, from the biggest trends to what businesses are looking out for when they are trying to invest. Bernadette, it's great to have you in studio.
Thank you for having me, Trinity. It's exciting to be here.
Absolutely. So let's just jump right in. Talk to me about what you're seeing right now when it comes to renewed investment in New York City's commercial real estate space.
We're definitely seeing a lot of new trends. I think in the last 2 weeks, we've received over $100 million worth of offers, mostly on properties that have been sitting stagnant for well over a year, some of them even 15 months. We are seeing a lot of the back to work being influenced, where we have like the federal back to work orders. We have Apple, the tech companies now coming back. So I think that's been a big driver into the market of people coming back and now going back into that commercial office space.
I want to lean into this conversation a little bit more to talk to me about the biggest trends that you're seeing and shifts pre-pandemic versus post-pandemic. What are you noticing right now?
One of the biggest shifts that I'm noticing is the back to work for the IT and the creatives. They were one of the last to sit on the sidelines. Apple, Google, Fortinet, just having a lot of the flex work programs and being able to stay home and not have to go to work. I'm seeing now all of the back to work trends coming into play, into offers being made from the big tech companies on pretty big, like 548 West 22nd Street.
Yes.
We just traded over $50 million.
Yes.
Owner
I was
user.
just going to ask you about this magnificent deal. Talk to me about what makes this deal specifically at 548 so desirable.
Well, because of its price point that we got, it's brought back a resurgence into the marketplace. Up until this deal, people in the neighborhood were transacting $450, $500 a square foot. We got over $1,300 a square foot for an owner user. Wow. So that's the difference that we're seeing right now is the owner users are going to come in and they're going to pay a premium for what they want, as opposed to investors just coming in to lowball and kind of grab these deals that were in the market that we were seeing prior.
And I do want to talk to you about another significant deal, 281 Park Avenue South. What would you say is this is a significant building. First of all, I want to give our viewers a little bit of background on this building. It's located on Park Avenue, one of the most desirable places to live in real estate in Manhattan. Anna Delvey, that whole series was filmed in this building, but talk to me more about why this is so desirable.
You used to live in the area, didn't you?
I did, on 21st and Park, yeah.
I used to live at 295 Park, and I used to walk past the building daily and be like, this is amazing.
It's just so beautiful. And when you enter, it's just stunning.
Stunning.
Talk to me about how significant it is that you're working on this project right now.
It's a very significant trophy listing. It's one of its only in its asset class right now on market. We are seeing a trend of people now looking for live work, family office. There's a lot of museums, a lot of social clubs coming in. That's another movement and trend that we're seeing right now. These social clubs are just kind of taking over the marketplace. Mm-hmm. And these are beautiful places that they're looking for the stunning architecture, the 21 feet high ceilings, the chandelier, the historical landmark, and just having that special space has been something really iconic to be part of. And we're seeing lots of offers come through, and we're eking through, hopefully one of them getting accepted soon.
Talk to me about, from a marketing standpoint, how are you leveling up your game for iconic pieces of property like this throughout Manhattan?
Well, because we're at Sirhan, we have the largest reach of any company really worldwide. So our platform is over 8 million across all of our platforms. So we're really utilizing that platform to go out and get the ultra high net worth buyers, the end users, the owner users, investors, and changing the way it's been marketed, just not going through traditional like CoStar or LoopNet and hoping someone calls, but really taking an active stance in the marketplace of bringing these properties to the consumer as opposed to waiting for them to find it.
And briefly, we were talking about the different trends pre-pandemic versus post-pandemic, but have you seen a difference in the type of customers that you're attracting or the buyers that you are attracting?
Yeah, the biggest shift I'm seeing is people trying to figure out how to work and also be able to live in the same space. So the live work is slowly starting to come back. We have listings like 335 West 38th Street. It's a perfect live work where it's 4,000 square feet. You have 2,000 feet in the front where you could run your office, your business, and then in the back it's a 3-bedroom apartment. Stuff like that.
And with the new administration obviously taking shape now, where do you see the broader commercial real estate landscape going the rest of this year?
I think right now it's going into bigger businesses now instead of leasing, purchasing, and that's where a lot of our transactions are starting to happen. We have 111 West 24th Street, which is another trophy asset. People can get into it at $600 a foot, and then they can lease up half the building and reside or own and occupy the other half of it. So trends like that we're starting to see where people are looking for more flexibility in their space and not just like a traditional cookie cutter office to like 9 to 5 it.
Well, amazing. It was so nice having you in
Thank
studio,
you.
Bernadette. Thank you for joining us again. Bernadette Brennan, Managing Director for Sirhan Commercial.
Thank you.
Now coming up, we're going to be speaking with today's bell ringer, Fortune Editor-in-Chief Alyson Shontell, as the company celebrates a milestone moment. So stick around for that. Here at Money 2020 in Las Vegas, one of the big key topics of today's discussions and panels, obviously, with blockchain, cryptocurrency, and the regulation around that. Talk to me about what you're seeing right now in the sector.
I think that the sector is definitely maturing, at least globally, to the point of mass adoption. Of course, like we've been seeing this first and foremost in crypto adoption globally, that I think outside of the US, we are seeing a lot of countries, whether it's Europe, Latin America, and Asia, putting fairly good regulation in place. And on the back of that regulation, we are seeing a lot of adoption. I think that the most interesting part right now is that we are seeing a lot of adoption of stable coins for payments, which is very relevant for this conference, of course. But on Fireblocks, now more than 50% of the volume that we are processing, which is about this year, we're going to process $2.5 trillion worth of assets that are going to move through the platform. More than 50%, so 1.25 trillion, is actually stable coins, which is used for international cross-border payments.
Can you tell me more about what your expansion plans are from your vantage point, especially when it comes to DeFi?
DeFi has been at the forefront of what we were doing at Fireblocks. We have several hundreds of clients that are interacting with DeFi through the platform because it gives them better liquidity, better opportunities. And what we are been doubling down on is two main things in DeFi. The first one is to provide secure access and to enhance the security around DeFi. So as most people that are somehow familiar with the space, a lot of the hacks and a lot of the issues that we were seeing in crypto are related to DeFi. So creating the perimeter around the security and compliance that such that it's...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, we are seeing the markets move a bit of muted reaction today, of course, as traders continue to digest the latest on the tariff front. Of course, we also have jobs and earnings data on tap this week. Earlier, we saw Fortune ring the opening bell to celebrate its 95th anniversary. And as the media industry continues to modernize, I want to bring in Fortune's editor-in-chief and chief content officer, Alyson Shontell, with more. Alyson, welcome and congratulations.
Thank you so much.
It's great to have you here in person. Of course, I know you've been leading the helm as editor-in-chief at Fortune for several years now. And as we start 2025, what is on your radar?
So I think everybody is looking at what's happening in DC. What's happening with Elon Musk there? What is Trump doing with these tariffs? Where all eyes are on Washington. I just came back from the World Economic Forum a few weeks ago, and even though the administration wasn't there because of the inauguration, all eyes were on the executive orders, what's happening in DC, what's the US doing, and how's it going to really change the rest of the world. So that's the focus for us, as the business lens of that. What are the economic impacts?
95 years is really important, a 95th anniversary, of course, at Fortune. So we've talked about what is immediately on tap, but as you look to the next 95 years of this brand that you lead editorially, what does that look like?
So 95 years, amazing for any company, let alone a media company. If you haven't heard, the media industry is very difficult. The entire time I've been in it, it's just been a sea of changes to the business model, the advent of the internet, social media, all these things. And so like the keys for us is keeping core to our mission, which has really been the same since it was founded. It was to document businesses without fear or favor. We're not doing it to puff anybody up, but we're doing it because business transforms the entire world, all of society for all of us, and if you don't understand it, then you're going to get left behind. So that's why we do what we do. But as we look ahead, there's obviously a lot of changes still coming. We're still seeing how AI is going to shake out in the industry. I generally think that there's a place for Fortune in terms of quality is a scarcity, and that's exactly what we do, and trusted journalism is also a scarcity these days. That's something that we've been in service of readers for 95 years. We're the company that documented the downfall of Enron. We created the term hedge fund. We used to edit Warren Buffett's shareholder letters. We created the Fortune 500 70 years ago. So we're rich with just deep quality journalism, and that's going to be the focus for the time to come.
And with that expertise, that background, of course, that access as well, Alyson, what have you been hearing from leaders in terms of lessons that they are taking into consideration right now?
So we had a CEO dinner at Davos, and we asked everybody, what is your thought for 2025 if you had to sum it up in 1 to 2 words? And they all, most of the room said cautious optimism. They're looking, I think if you look at, there were 60 major elections all over the world last year, and most of the incumbents lost. The world is ready for change. They want to shake things up. There's a significant portion of the population, certainly here in the US, where the system hasn't been working for them. They feel left behind. They're ready to shake it up. So I think like leaders are taking note. We still think capitalism is the best model for fixing a lot of problems. There's a lot that can be done to fix capitalism and make it better. And so the leaders on the ground, I think, are thinking through that lens of like, what do I need to be thinking about for my workforce, but how do I drive my business forward in these uncharted waters, and how do I kind of just maintain an optimistic lens despite not really knowing what's around the corner.
Yeah, so to that end, Alyson, I know Fortune recently released its most admired companies list. What went into this and which companies topped the list?
So we've been doing this list for decades, and it's really a measure of what do your peers think about you. So it'd be like, Kristen, what do you think of all the other business journalism people out there? Rank them. So that's essentially what we do for these companies. And usually what nets out on top is a company that has great leadership, high performance, innovative products. So you see Apple just consistently over and over again at the top of this list. NVIDIA, before it was a household name, you can see it rising in the rankings. People have been really impressed by what Jensen has been doing there since the 90s for a very long time, but it was kind of simmering quietly among peer set in the Fortune 500, let alone not quite public yet. So the kind of Walmart, the companies that stand the test of time with great products, great leadership, great performance.
And how are you finding that these companies are leaning into technology these days?
I mean, AI is certainly the buzzword. I think everyone feels like they need to adopt it, or at least say they're adopting it. We're still yet to see a lot of companies creating real efficiencies with it. I think some are on the right track and some are not, but the ones that have really embraced it, or it's just like core to their DNA, like an Apple or a Google, I think we're seeing this performance is better.
Alyson Shontell, she's Fortune's editor-in-chief and chief content officer. Such a pleasure to have you in studio.
Pleasure.
Thank you.
Thank you, Kristen.
Congratulations to you and, of course, to Fortune. All right, well, elsewhere, one startup says its platform is shaking up corporate travel. And for more on this, I do want to send things over to Trinity Chavez. Trinity.
Hey, Kristen, that's right. Dublin-based Romer says that its platform is helping firms save 30% on corporate travel by paying employees instead of hotels. Joining me now to discuss this further is Stephen Dooley, Romer's founder. Hi, Stephen.
Hey, Trinity, how you doing? Thanks so much for having us on.
Absolutely. So let's just dive right in here. What inspired you to build Romer, and how does the paying employees, not hotels model work?
Well, I think corporate travel hasn't really been disrupted in quite a long time. We're responding to a couple of fairly visceral pain points that we saw within the companies that we were speaking to. One of the main positives that came out of the last few years was the way that we work has now been revolutionized, but there's a lot of challenges that go with that, right? Team members want to be in person for engagement, and then the senior leadership tend to want their team members together so that everybody can build culture, collaboration, and be more productive. But one of the things that's getting in the way of that is the sheer cost of accommodation. So hotels are growing 10% year on year, and we're really kind of seeing that that's stopping people do their best work. So we wanted to try and find a solution in that space that was a win-win-win, a win for everybody involved.
Yeah, and providing that incentive as well. You also describe Romer as a win-win-win. So can you break that down? What exactly does that mean?
Yeah, I suppose the old way of corporate travel, you kind of had two options pretty much, a hotel or an Airbnb. There's very little incentive to choose one over the other, and there's very little incentive to choose a kind of cost-saving solution for the company. What Romer does is it enables employees to be hosted by a colleague or a friend they have in the city that they're traveling to. And essentially we take the alternative spend that would have been spent on the hotel and we split that up, right? The company saves about 30% straight off the top, and then we cut the rest back to the employees. So when we say it's a win-win-win, the company gains by saving money off the top and having their team members build culture in person, but also both employees, the host and the traveler, are getting paid as a result of using the service.
But Stephen, when it comes specifically to tech companies, who benefits the most from Romer solutions?
Yeah, it's interesting. One of our investors, Jeff Diana, was the CPO of Atlassian, who are kind of a thought leader in the distributed workspace. And he jokes saying he thinks that we have the first solution that CFOs and CPOs might actually get along together when they're talking about it. So with CFOs, it's very obvious what the benefit there is, right? They're always examining every line item. With Romer, they save 30% and it goes straight to the bottom line, but they get to deliver that to the workforce in a way that's more of a positive initiative, right? They're offering an opportunity to employees to earn through the platform. On the other side, for CPOs, they really care about culture, collaboration, making sure everybody's doing their best work, the teams are engaged. Some of the challenges with the flexible working model and distributed work is that we maybe don't get the opportunities as much as we used to. So we feel the Romer experience of bringing team members together in person in a more unique way, in a more relaxed setting where you can build culture over shared interests, means that it's a win for those team members involved too.
And how does Romer ensure security and trust for both employees and companies while using the platform?
Yeah, so look, we're laser focused on this. So my own background is I was doing PhD research before Romer, and what I was really studying was how Airbnb and Uber and digital platforms build trust and adoption. So it's at the forefront of our mind, and it starts by betting in products. We have a third-party insurer who has a damage cover and a host protection embedded in our platform. But really, at the end of the day, this is an employee's choice, right? If they want to stay in the hotel or the Airbnb, they'll always be able to do that. But with Roamer, we're giving them an alternative that allows them to create an income opportunity for themselves. So we're kind of making sure that there's transparency on host profiles, but everything is kind of opt-in from the employees, and we want to build an experience that they're really excited about.
Stephen, have you faced any challenges when it comes to disrupting corporate travel, or how have companies responded if you have?
Well, we've seen quite an overwhelmingly positive response in terms of the concept because of that win-win-win nature. I think one of the main challenges is there's not been a lot of disruption, right? So some of the most prevalent corporate travel management platforms like SAP Concur, they kind of hit the market in the 90s. We have a totally different way of working now, right? We have distributed teams all over the world, and that requires us to rethink all of our processes. So I think one of the only challenges we'll have is it's a matter of time and figuring out how this new model of work actually works for us. And I hope that we can kind of play as being a thought leader in sort of guiding us through that process as we go forward.
And where do you see the future of Roamer going? How do you see your platform evolving in the near term, especially when it comes to Roamer Friends?
Yeah, so we're super excited about Roamer Friends, which is coming next month, right? We've had a huge response globally. We've got users in over 100 countries already, which means there's definitely an appetite. If you're currently a customer of the platform, your employees can now stay with friends and not just their fellow coworkers. But also, if you've heard about Roamer through some media like this or through referrals and friends, and your company isn't yet on board as a customer, you'd be able to use the service yourself. So they'll be able to take a one-off trip, they'll be able to input the details of their host, their friend or colleague, and whoever they're staying with. So we're really hoping that that's a big opener for us, and we're excited. So that's going to launch in the next couple of weeks.
Thank you so much, Stephen. Stephen Dooley, he is Roamer's founder. We look forward to having you back on to share more news.
Thanks so much for having me.
Now, before we go, I do want to bring back in Kristen as we end the show. Kristen, we've had Fortune here ringing the opening bell, kicking off trading for the day. What are we looking at right now?
Trinity, that's exactly right. An impressive 95-year anniversary for Fortune. It was great to hear from the editor-in-chief on our show, of course, after she rang the opening bell. And look, on Wall Street, we know key fundamental themes continue to be in place, like earnings and economic data. But of course, this week, the tariff talk certainly has taken center stage as well. And we've continued to follow that with insight from guests on our show. So we'll see you back here tomorrow morning, 9 a.m. Eastern. Have a great day.
Being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.